This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, September 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets are December corn up 3/4 at 422.5. November soybeans are down 4 at 10.07, and December Chicago wheat was up a penny at 5.11 3/4. This morning, the USDA had a export sales announcement, 122,947 metric tons of corn to Mexico. 100,593 of that was for 25, with the balance 22,354 being for 26. Yesterday, we got crop progress and conditions. Corn lost 1 percentage point in the good to excellent category at 66%, still up above the 5-year average of 58% there. Soybeans down 2% in the good to excellent at 61% from the previous week, and also slightly above the 5-year average, also 58%. Corn harvest, we're 11% complete across the nation. That's up from 7% a previous week and right in line with the 5-year average. Soybeans 9% harvested. That's up 4 percentage points from last week and right in line also with the 5-year average. Spring wheat harvest wrapping up. We were up 2 percentage points there, so we're at 96% complete. That's right in line with the average. And on the winter wheat planting side, we're falling a little bit behind. 20% planted this week. That's up from 11% the previous week, but still below the 5-year average of 23%. Good morning, guys. I know we're still looking at soybeans here this morning. Argentina, suspends their export taxes on a number of ag products. We get word that China booked 10 cargoes right after the tax drop. So no surprise there with the games that continue to be played. But Justin, I guess as we look at it here this morning, I mean, beans still, both from a charting perspective, a fundamental perspective, there looks to be some headwinds here, as we continue this week.
Yeah, no, definitely. I mean, if you look at beans versus corn, as far as the ratio is concerned, you're back down to 2.38. We got as high as 2.63 after the kind of surprise acres number that we had on the August report. And I think it's all the things we talked about on the show, but, the demand being in such question, I think is really just weighing on beans. And to be honest, we've been talking about, wanting to get real data from clients, just yield data, that is. And so far, I'd say there's, been really mixed bag, but kind of the more positive surprises are, bigger yields than expected have been in some of the drier areas and in soybeans, and kind of vice versa on corn, where really some good areas that have had some relatively disappointing yields, and even some really disappointing yields in some what you would think is good corn areas. So I think the kind of combination of things, I think market's feeling a little more confident that the corn yield numbers coming down. Obviously we're going to keep fine tuning what coming down means. Is it a couple bushels? Is it a lot more than that? So far it seems like there's been enough good corn yield reports too that it's certainly not a disaster by any means, but when you're starting with such a high number, it doesn't have to be a disaster. It could be a new record and still be a pretty friendly number, obviously. So I think that's kind of the kind of story there with, beans and corn. It's just, two totally different demand pictures. And now it kind of looks like supply might be more in question on corn than beans. Again, it's super early, right? It's 10% harvested. So, maybe bean yields really start trailing off as we get into some later planted, and maybe same with corn, or maybe corn improves. I don't think we all know. It seems like a lot of the worst corn, is it genetic specific? It certainly seems like, the ones that didn't really spray fungicide at all obviously got hammered, but more specifically, certain varieties that really didn't fare too well in the combination of whether it was, too wet or just whatever kind of combinations we're throwing at it this year.
So it was interesting. I mean, you got some people that are, frustrated that, Secretary Bessent comes out and says that, we're going to potentially do things to support the Argentine economy. And then here they are, they're getting the business. And there's just this give and take on everything that's going on. I mean, I guess what's your 2 cents on that front?
It's hard to tell what they're really trying to do there. Is it trying to secure Argentina a little bit with debt, as a kind of a counter move to China, and Brazil a little bit? It really doesn't make sense that you want to support a country that keeps voting itself to be socialist, and then their currency collapses and interest rates explode. As long as they're going to have those kind of policies and keep voting in those kinds of people, let the economy fail, I guess, my opinion. I mean, I would think there's maybe some other bigger strategic play, because at face value, like, why would you go support them?
Right. I think that's what everybody's saying this morning. It just doesn't make, on the surface, it doesn't make very much sense.
Right. I mean, it's like, I guess we have more debt we can just throw around. I mean, I feel like we're trying to fix our own debt too. So probably don't need to take on theirs unless it's more strategic, which I'm guessing there's something of that going on.
Dustin, what's on your mind this morning?
Yeah, I think, we've talked about beans a lot, just not having much of a story. I think that there was some excitement there and on all ends, including our end, when we got that August WASDE report that showed, 2.5 million less bean acres than we were anticipating. And it's like, how do we not run into, some sort of a supply problem potentially? China had bought 0 up to that point, and, we were thinking, well, it's still, there's still time for that to happen. And now we have way too few acres. Brazil can only sell so much of that record crop before they run out. And then we're left with too few acres for production. Now you're looking at maybe the drought wasn't as bad as expected for a lot of these yields we've heard anecdotally so far. At least I think that's the market's trading. China still bought 0. And now we're competing against the 0 export tariff for all products in Argentina through our gut slot. Like, I think this is just kind of devastating to the soybean case at the moment. And what we thought we were going to trade above that upper band of resistance that's been a long time with this kind of coiling market. Now we're within range of maybe testing the lower band again. I think the call for, an MFP type payment, that seems almost like probable at this point, in my opinion. Talked to a couple of growers yesterday that, just heard that Brooke Rollins is like personally reaching out to some people and just seeing like what would be a fair way to do this. And one grower I think said something perfect was, guys kind of need some, they need some sort of certainty to know what's going to happen. If there is going to be some sort of MFP3 type of payment, because China is just obviously not interested in discussing this right now, to maybe provide that information to the market now so people can make some real decisions. Even if that payment's not going to come till, next March or June, give some sort of clarity of what's going to happen. Because right now, I think people are a little nervous that they sell too soon, and then there is some sort of a favorable outcome that they may have made a mistake. Now I will say, for those that did buy the higher end insurance policies, this sell-off in corn and soybeans that we've seen, this year, and maybe if it continues to go before October, it may end up being a windfall in some cases, especially if they've bought up insurance. It's like, okay, well, if it's going to go lower, have it go lower while I have protections in place, and then create a demand base. That might be our best outcome of this lower price, sub cost of production situation. If you take that higher end insurance, increased farm bill, MFP payment, even though no one wants to rely on government payments, it actually may not be the worst year, just to get into a clean 2026, in my opinion.
Yeah, I want to add to that too, Dustin. I think China has put a ton of eggs in Brazil's basket as well. By avoiding us at all costs. If anything goes wrong, you call it this winter, December, January, February, it could be they could be kind of trapped too the other way. And maybe they don't care. Maybe they're like, well, if we have to, then we'll buy U.S. beans. But there certainly are a ton of eggs in that basket. A lot of risk on China's side, I think. I mean, you've even seen, during this time frame, like their meaning Brazil's basis levels explode. Talk of importing U.S. beans because the ARB makes sense in some cases. Getting beans cheap out of the PNW. There are arbing opportunities when countries want to do uneconomical things because of a trade war or a disagreement. So I personally think we could see kind of the darkest days or get the most bearish. I mean, it seems like every time you look at the range in beans, you can almost write a story down, like when we tested the downside of the range here, when we went to the upside of the range here, of just optimism, pessimism. And in my opinion, we're still just in that that kind of psyche. When we go down, we're going to focus on all the negative things. When we go up, obviously we'll talk about supply or other things. And the other thing about government support, I'm curious on, MFP payments, and maybe they do happen, but we did just pass a massive increase in farm bill levels, which were basically at or in the money. So I just wonder what the appetite is. Maybe they can do it with, funds from CCC. I mean, I've heard a lot of different write-ups on it, so certainly possible. I'm just curious how hard that'll be with, kind of some of the spending that they already did add to the farm.
Most of that's going to go to the bank and get you kind of, sort of flat going for 26 then, right? I mean, we're still going to have the same conversation about 26 at this stage of the game.
Yeah. I mean, like right now you can see 26 beans versus these 26 corn, for example, that ratio is down to 2.3. Kind of that longer term average is 2.35, 2.37, somewhere in that range. So we're already starting to go that way. I mean, it wouldn't surprise me if, get down to 2.2 or something, if people really get nervous about planting beans again. You probably have to go to a ratio that low to disincentivize, acres switching back from the 98 million corn acres this year into some more beans. I would say like a natural switchback would be probably 5 million or 6 million acres, right? Unless you get the ratio super low and really disincentivize bean acres. So that's what's going to be a lot playing out, I think, between now and call it February.
Well, just I'll have to ask too. I mean, with some of the disease pressure you've seen in corn, just agronomically and stuff like that, are guys going to need to do some switching and stuff too, aren't they? Agronomically, or like, how's that look?
That's hard for me to.
I'm gonna have to find that out.
Yeah, I mean, you would think so. Just because it's such a massive number of corn to have a natural, like I said, just to have a switch back to some degree is just, most likely.
Mm-hmm.
I think there's still a lot of debate on what kind of happened this year with some of these yields. And I think as we get into more and find out why certain varieties did so bad and what conditions caused it, or if it was, were margins so compressed that, guys opted out of spraying fungicide, or maybe only did a half rate, or did one instead of two. Probably a combination of a lot of different things that led to it. I mean, some of those areas in Iowa that, probably look super green on a NDVI map, right? Got 20 inches of rain.
Yeah.
And probably lost, a lot of nitrogen and other things. So I'm guessing it was a combination of a lot of different things. But how does that affect rotations next year? I think it's probably going to be the attitude of what the relationship with China looks like. I would think if you're in the Northwest and you're getting $1.50 under basis for beans and there's not a market to the PNW, it's probably makes you nervous to plant beans. So to Dustin's point, I think a lot has to happen certainty wise between now and next spring.
Very good. That's good stuff. We got a couple of minutes here, Ryland. Screwworm stole the show yesterday, but there was kind of a cryptic message out of the USDA that I thought was interesting, that they're looking at a plan to rebuild the American cattle supply. And I think everybody's chirping about what that potentially looks like in terms of opening government pastures and incentivizing the producer and just different things. So that'll be interesting to watch. And then obviously a strong start for hogs. So I guess maybe share a few thoughts here as we start the day.
Yeah, no, you're exactly right. I mean, the screwworm situation definitely just got us all whooped up. I mean, the cattle on feed report was generally hailed as kind of neutral to friendly, but obviously, with this screwworm situation kind of coming closer and closer to the border, I think it's more of a when, if not if, if we do see, actually screwworm come into the U.S. And there's been a lot of conversations about how the market reacts to that, what the implications are. Right now, it's really hard to tell. Obviously, there's a case to be made on both sides. So it's just more of a wait and see approach. But yeah, in the same vein, the USDA coming out saying that there will be some kind of rebuilding incentive. I imagine that's probably dollar related. And if we're just going to start throwing money at this situation, I don't see how the cattle market really couldn't see that as friendly. If there's going to be some kind of feeder relief program, if we're going to open up acres, still a lot to know exactly how that rollout's going to go. But I think overall, with profitability just staying so strong right now, throwing extra money at this situation, just giving, buyers a little bit more incentive, I think is just overall just, like I said, I think that got the market pretty excited too. So more of the same, really. No cash trade yet, though, on the near term. Seen kind of a mixed beef market to start here. So just judging by the action on the board, if we can kind of hold up here, I think generally speaking, there's going to be kind of a steady, more firm outlook for cash this week. So we'll see how that goes. And yeah, new contract highs in hogs yesterday. Just feels like we saw the bounce back in cash. Cash was up to 106.83, up over $3 yesterday. Carcass was firm as well at 113.30, up $1.25. So we're staying really strong here at this time of year, where typically we'd see those kind of gravitate lower. So we've got the hog and pig report on Thursday, and we're going to see if that really changes the supply outlook. Right now, purportedly supplies are pretty tight, and just overall, it seems like that's really been the catalyst for why we're seeing this kind of support in the market. And a record long managed money, and it's a factor I think that we're also kind of seeing in the cattle market, which is you get down to some of these bigger moving averages, and the market feels very comfortable just trying to buy those just from a trading perspective. So we'll see if that continues.
Very good. Appreciate the update there. Let's just came into the open. We got December corn up $0.015 now, 4.2325. November soybeans are down 4.25 at 10.07 is the last there. In December, Chicago wheat is up $0.0375 at 5.12.5. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. I appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.